Hello everyone and welcome to my YouTube channel. Is the stock market cheaper, a bargain after the recent crash? Well, judging by multiples and judging by the earnings season, the reality is that it is not particularly cheap. If we look at the earnings season to start with, what do we see? First, a very poor level of growth, and also a very poor level of growth not just in sales but also in earnings per share. Margins are coming down. Companies are also eliminating guidance. This is very important, and reducing dramatically or fully eliminating their dividend expectations. Buybacks are also coming down because, as you know, buybacks are pro-cyclical. So many companies with less cash are actually buying back less of their shares. All of these factors add to a challenging environment, because if the earnings season has been poor in an environment in which there was only 2 weeks of a lockdown, 2 weeks of economic collapse, imagine how it is going to be in the second quarter with the full extent of the crisis embedded both in emerging markets and developed economies, growth estimates, sales and earnings. So the earnings season is important. It is important as well to understand that multiples have come back to the levels that we had seen in 2018, 2019, and that those multiples are based on estimates of 2021 growth of earnings that look excessively optimistic, hugely optimistic in my opinion. And we need to be extremely cautious about this, because the downgrade cycle of 2020 may be close to over, but the downgrade cycle of 2021 and 2022 earnings has not even started. That is the problem of V-shaped recovery estimates and the sort of J-curve type of views of earnings, that immediately stocks look optically cheap because the underlying earnings estimates that are embedded in those multiples are completely unrealistic. So we need to be extremely cautious, and we need to be also very prudent, because the macro environment is not supporting the level of multiples that the market right now is discounting. Yes, monetary policy will continue to be very aggressive, and that will help asset classes. But if the macro environment, if the earnings environment do not go in tandem, it is very challenging to believe that what we are seeing is bargains out there. Let's pay attention to all of these factors and look at opportunities based on very detailed analysis of where the earnings are going to go, and the ability of companies to retain cash flow, to keep their margins, and to pay dividends and continue with their buyback plans. Thank you very much. Please subscribe to my channel. Please leave your comments below, and also continue the dialogue and keep defending freedom. Thank you very much.